Hey everyone, welcome back to Upside Down Data. This video is a follow-up on the video I made last Monday talking about the possibility of an alt season. We looked at three indicators to try to get a sense of what the likelihood would be that we would see altcoins perform well. We looked at Bitcoin dominance, the Ethereum to Bitcoin ratio, and the USDT dominance chart. And I thought this would be a good time for an update 1 week later, because since then we've actually seen a few altcoins put in really impressive moves. One of those, notably, is ZIL, which you see up here on the daily chart. And so in addition to taking another look at those three indicators, which can tell us about where we are in the market cycle and whether this is likely to be a time for Bitcoin to shine, or whether altcoins might be able to take the reins, we're going to look at ZIL and see what its price history in particular, and trying to put this most recent move in context, can tell us about the market cycle as a whole as well. So if you like the content, subscribe to the channel, give the video a like, and leave a comment down below. We'd love to hear from you about what you think is happening with alts right now. Is this a time to be in alts? In your opinion, are you accumulating alts, or is your focus on Bitcoin? So let's get into it. I'm going to get my face out of the way here to make sure that we can clearly see the charts. So this is the ZIL daily chart, and it's pretty apparent just from a glance that ZIL has performed really well recently. In just a couple of days, ZIL put in a move of, let's see, taking a measured move here to the top of the wick, 155%, to the current price level, 115% in just 3 days. If we just look at that one daily candle in just a 24-hour period, ZIL put in a 100% move. Not every day that happens. So what's it mean? Well, I think there are a couple of things that are important to take away from this move that ZIL has just made. The first of those takes us over to the UDPI. This is the upside downside potential indicator. It's our in-house risk indicator for ZIL and for almost 30 other assets at this point. And we look at this on the long term as well as medium and short term timeframes. The long term is reactive on the level of months and even years, and it's designed to be used in trading on those timeframes. The medium term is a little bit quicker. It responds on a level of weeks to months, and it's useful for thinking about trades on those timeframes, whereas the short term is the quickest, obviously, and it reacts on the level of days to weeks. Generally, weeks is the way to think about the short term, but when we see a move that's so dramatic as this one, then we do have to think in terms of days as well. And you can see that clearly on the chart. So on the top row here, we have these gauges, which give you the value of the UDPI. And on the bottom, we have the last 30 days. So you can actually see how it's moved over time. And corresponding to that 155% move that it put in over a period of 2 days, we see that the short-term UDPI made a huge jump from below 1 up to almost 4, which is well into the red zone, which indicates high risk and plenty of realistic downside potential for the short term. This does not mean that ZIL can't continue to run, but it does mean that it's already exhausted much of what the model would consider to be its realistic upside potential for the short term. That's less the case on the medium term, and the long term is quite neutral right now. So there's approximately equal upside and downside potential for ZIL according to the model on the long term. But on the short term, ZIL is quite overextended. And the takeaway there is that now is not the time to ape into ZIL. We don't want to chase pumps. We do want to take note when something like this happens, because it's a pretty rare occurrence for 100% in one day. It's been a long time since ZIL made a move like this, if ever, in such a short period of time. So we do want to see what it does next, but we don't want to ape in expecting, another 100% coming right up. That's usually not how it works. That's point number one about ZIL. Maybe you already had a sense of that. If you're the kind of person who uses risk indicators and takes a data science approach to the market, then you probably know not to chase pumps, but it's always important to reiterate. But there's a second thing that we can note about ZIL, and that's more relevant to that broader question about alt season. Are we going to see an alt season? Is this an alt season? When an altcoin puts in a 2x in one day, does that mean that we're in an alt season? We can get some insight into this question by looking back at the last market cycle in 2020, when the market spent the next year basically up only. And that was certainly true of ZIL. So here is when ZIL bottomed back at the COVID capitulation. It then made a very quick move over the subsequent period up to about 5 cents. That was a 16x over just a little over 2 months. Then it retraced a bunch all the way back down below 1 cent before it went back into another move later in 2020. And what's interesting about this from the present perspective is that the bulk of ZIL's move in later 2020 or 2021 actually came a little bit early than most of the rest of the altcoin market. So if we take this here as the beginning of the move, when it actually started to go into that parabola at the beginning of November 2020, we can see that it had put in the bulk of its move by the end of 2020. At this point, most altcoins were kind of sitting on their hands and waiting for Bitcoin to chill out a little bit. And Bitcoin did, right at around the end of the year and the new year of 2021. Ethereum and alts took the reins, and we had an alt season for a few months, I think by just about any standard. ZIL participated in that to some degree, but it started running early. Most alts were not yet putting in moves like this. So over here in late 2020, put in 6x here in less than 2 months. And during that time, Bitcoin dominance was increasing, which means that Bitcoin was really leading the pack there. Altcoins were lagging behind, but not ZIL. But ZIL actually moved with Bitcoin in late 2020 and didn't seem to really wait around for Bitcoin to slow down when most of the altcoin market ran. And so ZIL has a history of being somewhat different than a lot of altcoins. And the relevance that that has to the situation that we're in now is that if that's happening again, what this could indicate is that we're in an earlier stage of the market cycle where Bitcoin really has the reins, and altcoins that moved with Bitcoin might perform well, but perhaps it's not the time for altcoins to take the reins from Bitcoin. Perhaps it's not the time to expect to see a major move down on Bitcoin dominance of the magnitude that could correspond to an alt season. So I would consider this to be a point against the possibility of an alt season. That doesn't mean that altcoins can't perform well, and clearly alts have been performing well over the past week along with Bitcoin. The question though is whether an investor would be better served by holding primarily Bitcoin or by diversifying into altcoins on the expectation that they might outperform Bitcoin for a period of time. So with that in mind, let's take another look at the Bitcoin dominance chart. The last time we looked at this, a week ago, we were about at the same level we're at now, hovering around 43%. Bitcoin dominance has basically gone sideways over the past week, which indicates that there's really been no advantage to holding Bitcoin relative to altcoins or the other way around. Both have been performing reasonably well over the past week. We do still have the same situation in a macro sense, which is that there's a possibility that the Bitcoin dominance is rolling over here. This is the first time that it's bounced off the lower bound of this range that it's been in for quite some time, but has not managed to reach the upper bounds of the range. Instead, it got about to the middle here at 44% and is now entered a downtrend. And if that downtrend is to continue, it might bring us back down to the lower bounds of this range at around 40%. Where things would really start to get interesting from the perspective of holding altcoins is if we saw Bitcoin dominance break through the lower bounds of this range, make a lower low below 39%, and continue downwards. That's what I think would really represent an alt season. There could be some altcoin outperformance on a shorter term time frame to bring us back down to this 40% level. But that would be relatively modest. I'm not sure that that would be likely to qualify as for an alt season, which obviously is something that we would all like to experience in this space. We do see some bearishness on Bitcoin dominance, but nothing decisive. And it's completely possible here that Bitcoin is going to take the reins and alts will sit and watch. And if that happens, Bitcoin dominance will continue on upwards. It hasn't yet made that lower low. This still could be a little bit of consolidation in the middle of this range on its way up to the top of the range. So we're going to have to wait and see. So Bitcoin dominance, as I've explained, is the main thing that you have to look at if you want to get an insight into how to allocate your portfolio between Bitcoin and altcoins, and also try to get some edge and speculate a little bit about when an alt season might be likely, and to try to capture the bulk of an alt season for the potential of life-changing gains. This is one of 3 indicators that we looked at last week, because there are 2 others that can also give us some insight into the alt season possibility. So let's take a look at the Ethereum to Bitcoin ratio. This is just the value of Ethereum divided by the value of Bitcoin. So 1 Ethereum is worth 7% of a Bitcoin, approximately right now. And this has also pretty much gone sideways, which indicates that Bitcoin and Ethereum have been pretty much moving in parallel over the past week. What's a little bit different here, though, in comparison to Bitcoin dominance, is that the Ethereum to Bitcoin ratio is still in an intact uptrend on the macro time frame. So if we just roughly draw in a trend line here, we can see that clearly. Since this bottom at around 5.5%, the Ethereum to Bitcoin ratio has been respecting this trend line and bouncing off of it, as it did most recently just a couple of weeks ago. And now it's consolidating a little bit above that level, and we'll see whether it continues on upwards. It also made a higher high, consistent with the idea that this is an uptrend, although that's a few months ago now. So what we want to see is whether Ethereum relative to Bitcoin can continue on up and break this 8.8% level, whether it can break the 0.09 level in particular, and a close up there would indicate that good times for Ethereum relative to Bitcoin. Now, I mentioned when we were looking at the ZIL chart that ZIL started moving in late 2020 with Bitcoin, didn't really wait around for the rest of the altcoin market. To put that in some more context, let's go back and look at the Ethereum to Bitcoin ratio. What we can see there is that Ethereum was in a downtrend relative to Bitcoin until the new year of 2021. Right on cue at the beginning of 2021, the Ethereum to Bitcoin ratio just absolutely blasted off, immediately made a 50% move. It ultimately made a 100% move before consolidating for a bit and then continuing on its way. So ZIL and Ethereum here are quite different in terms of how they've behaved in the past. Ethereum is obviously the leader of the non-Bitcoin assets, and it took its time, waited for Bitcoin to relax and to start to go a little bit more sideways before it made its own move. ZIL did not. ZIL was off to the races 2 months before Ethereum was. And to again extrapolate that to the present situation, maybe that means, if history is to repeat or at least to rhyme, maybe that means that what we're seeing now is a time for Bitcoin to shine and maybe some select altcoins. And maybe it means that the real outperformance for altcoins is not going to come until later. Looking at these 3 pieces of information so far, the recent ZIL move and ZIL's past price history, Bitcoin dominance chart, and the ETHBTC ratio, we're not really seeing evidence of an alt season forming. We are seeing some evidence of altcoins, or some altcoins, performing well. We are seeing evidence of the market as a whole performing well, but we're not really seeing evidence that altcoins as an asset class are blasting off. I could be wrong, obviously. Maybe this is the beginning of an alt season. I'm just not seeing the evidence for it on the chart. Now, hopefully that's not too disappointing to people. There's still plenty of money to be made. And if it takes a little bit longer for us to get to real altcoin outperformance, that just means that there's more time to accumulate, either by holding Bitcoin and then eventually trading that when the ratios are most favorable on the Bitcoin to altcoin pairs, or accumulating your favorite alts and staking them or earning yield in DeFi. And if we do see sustained bullishness across the market, if we see the crypto market cap as a whole continue to grow after the bear market that we've been in for a number of months, then there are plenty of good times to come. The last thing that I'm going to pull up here is an overview of the market here, the long-term UDPIs, because it's useful just to get a sense of how all these different assets are behaving, which ones are particularly low risk relative to others from the long-term perspective, and which ones are maybe a little bit higher risk, so that you can make informed decisions about how to allocate your funds. For quite a while now, we've seen that most of these needles are pointed to the left, indicating that most assets have been relatively oversold from the point of view of the model, and that there is plenty of upside potential that the model has considered realistic for many assets. There's now a little bit more of a mixed bag, because some of these altcoins have started to make moves back toward the upside and have kind of reverted to the mean. And so we see that reflected on the UDPIs. But there are still many that are quite oversold, where there's tons of remaining upside potential, some that are still well into the green zone, which indicates that the asset is relatively low risk at the time. DOT is one, Link is another. These are among the assets that we monitor pretty favorable looking in terms of the risk to reward. That's also true of Helium, KSM, and to lesser degrees, some others. There are really none that are overextended on the long-term time frame. When we look at all of these UDPI gauges alongside each other, it gives us two kinds of information. First kind is within asset. So for any given asset, let's say Avalanche, what this tells us is that Avalanche, relative to its own historical price action, is about neutral right now. There's no major deviation between what Avalanche is doing now relative to what it has tended to do in the past. Whereas on the other hand, let's say Link, right now, Link is underperforming its own tendencies by its own standards that it has set in its past price action. It looks like a very good risk to reward ratio. By its own standards, we would expect it to catch up a bit over time. That's one type of information that this gives us. The other type of information is across assets, or in other words, the risk levels that characterize the market as a whole. And when we see a situation like this, where there's a range going from very high upside potential and low downside potential, meaning low risk and pointed to the left, to pretty neutral and very little on the high risk side, that makes it clear that the market is still in a pretty favorable spot for accumulation. That indicates that there's probably a long way to go in the upcoming cycle. However long that's going to take, I'm sure it'll be twists and turns on the way to get there. But this indicates that across the market as a whole, the risk to reward ratio is still in relatively favorable territory. If we quantify that just by calculating the average of these UDPI scores, we get an average value of minus 1.49 UDPI. So that indicates that looking in aggregate across all 28 of these assets, the UDPI considers there to be a decent bit more realistic upside potential than downside potential for this cross section of the crypto market as a whole. If we adjust that by removing Bitcoin and Ethereum, then maybe there's an argument for doing that, because those are both such large caps that maybe they move independently to some degree. And if we just look at the other 26, we get a value of minus 1.60. So pretty similar message, even slightly lower risk if we look at the pure altcoins instead of BTC and ETH. Either way you look at it, we get a picture here of a crypto market that has been through a bear market, that's been in a downtrend for a long time, that has realized a lot of what the model considers to be its realistic downside potential, and that has still maintained its market structure on a macro scale. I'll just pull this up real quick to show you what I mean by that. If we're looking at Bitcoin price chart here, on the macro scale, we did not get back down to the levels that we visited in the middle of 2021. And so the macro structure here is consistent with an uptrend We've been in this upward sloping channel for a while, and we're now moving back toward the middle of the range. So there's good news here across the market, but the evidence that I'm seeing is not suggesting that this is an alt season or that there's about to be an alt season necessarily at the expense of Bitcoin. Hopefully, what we're going to see here is a continued uptrend across the market as a whole, and we'll keep an eye on how Bitcoin is performing, how Bitcoin dominance is performing, and how we can best position ourselves for this next phase of the market cycle. So hope you guys found this useful. Thanks for watching.